Let's do some Top That Trade now with Phil Flynn, a Fox Business News contributor, and Alan Nuckman, a pro trader at BullseyeOption.com. Good to have you guys with us. Round number one for our trader game, Holiday Hop. The stock market rallied into the Memorial Day holiday, but was it a bear trap or the start of a real stock market bounce?
Well, finally stocks bounced. We knew a bounce was coming. Now, let's see how it follows through. That's the million-dollar question. But this is the fourth time that it looked like a bottom was in place. What we need to see is an advance this week and close above last Friday's finish, and that would be the beginning of this bottom from a very, very oversold condition.
I think the bottom's in, and it was kind of crazy. We were on the Fox Business Next with Liz Klayman, and we had just a list of people say, oh my gosh, the bottom's not in. We're waiting for capitulation. But I'm looking at the chart, and we bounced off the Bollinger Band, and we bounced off of bear market territory. Right. We had this type of correction over the last couple of years, 3 or 4 times, and it is yet to proven it can stay in bear market territory for only the briefest of instance. So I think the market looks solid. I think we've priced in a lot of the interest rates, all the bad news, and now we're going to start pricing in the good news, and that means stocks higher.
Inflation is on the decline for real this time. So let's see if that's finally the psychological turn that we're looking for.
Round number 2, TINA trade. TINA is an acronym for the phrase there is no alternative. Goldman Sachs says a place to be is commodities and not in stocks. What is your pick to click?
There is no tomorrow. This is it. There's no alternative. Forget stocks. Forget everything but commodities. That's what they're saying, and to be honest with you, I don't think they're all wrong. I mean, we are in the midst of a commodity super cycle that's been brewing for many, many years. We've talked about it on the show many, many times, and now it's becoming apparent. We're short of everything. We're short of copper. We're short of oil. We're short of refining capacity, gasoline, grains, you name it, and that's going to keep this sector very hot. Usually the biggest concern in a commodity bull market is that high prices cure high prices. We could see a demand response at some point, but so far the demand response has been muted. That means that we still have a long way to go. So definitely you want some exposure to commodity and commodity stocks.
This is nothing new for us, but it's nice to see Goldman Sachs is the one making this call. And I actually like where Goldman Sachs stock is right now. As far as individual commodities, Phil says copper. I'm looking at copper. It's had a nice pullback. That market still has a lot more upside. But looking at Goldman Sachs stock, we've been trading between 300 and 350 for the last few months. This move about 325 could give it some legs. It was at 400 plus not so long ago. So my theme for today is beaten up banks. And I think they're making a good call, and I think their stock is undervalued as well.
Round number 3, rise up rates. Those good old dividend stocks that have been stalwarts in the market have been trounced. But which ones are still a go for the yield?
Well, I think we can go back to the commodity stock. EOG Resources was one that's on the top of their list, but I'm going to go a little crazy. I'm going to go a stock called Brightspire. The stock is BRSP is the symbol. This is a stock that makes loans, and usually low margin loans. So when the interest rates go up, instead of being hurt by that, you actually get paid more. So not only do you get a dividend, you supposedly make more money as interest rates go up, assuming that everybody doesn't default. But that's a different question. Stocks around, under $10, it pays a dividend. I think it's a good shot down here.
So dividend stocks are getting a lot of attention now because obviously people are looking for yield when you're seeing the markets decline. The average yield on an S&P stock is only about 1.5%, but the list that we were looking at is stocks that are looking to increase their yield over the next coming years. And I also picked a banking stock here. I picked Citibank, and Citi has been bouncing around this 45 to 50 level, and the halfway point is 60. But in the bigger picture, there's a stock, MO, Altera, that has actually made new highs here. It has a 7% yield, new highs here in May. So smoke them if you got them, but I guess that stock's been paying out. And that doesn't look to change anytime soon.
For your bonus round question today, we are talking June swoon. June is known for a month of selling, but is it the worst month of the year for the market?
No. I think the answer is no. I think a lot of people think it is. Sell in May and go away, but especially during maybe since 1950. But I will say that it hasn't been true for the last decade.
If you sold in May, you're going to have a long year ahead of you. That's what I'm thinking to myself. So I think Angie's trying to trick us. I'm going to say yes because it doesn't seem like it's possible, but I'm going to say yes because Angie's working our minds.
There was no trick. Phil Flynn is the winner chicken dinner for the day today. Good job, guys. September, February, and August are the worst months for the market since 1950. Well, we will be right back with more Business First AM after this break.